Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil markets. I'll start with Paris rapeseed. There are two key patterns here. The first and the larger one is the February 2021 to July 2022 ascending broadening wedge pattern. That's currently 720 3/4 to 970 1/2. This was not a perfect pattern, but it had been the main market driver higher in the early part of this year. The break lower in July has left the following incredible targets on the downside. The primary target X is in the 352 even area, with a harder to get secondary target X1 in the 217 area. These are obviously, pretty much way out there targets that you can put into your diary on the back page and just look at maybe once a year. The second smaller pattern was in development until late this week and seems a more reasonable opportunity. It was created from the break lower of the larger pattern in June and July and is an optimized falling wedge pattern, currently 572 1/2 to 612 3/4. The key features here have been the temporary halt to the decline at the February low of 599 3/4 back in August, the earlier breakdown through the 50% Fibonacci line of the December 20 to April 22 move at 644 even, the false break lower last week below the lower trend line, and above all of these, the seeming break higher, true break higher, up and out of this falling wedge pattern yesterday and today. Now, before I start looking at possible targets for this pattern topside, I'd like to reiterate something I've said these past 2 weeks, and that is that the key problem of this pattern has been that it's in the wrong place. But I don't mean it should be forming after we'd had an ascending pattern, not as in this case after a great big gapping drop lower. This has previously led me to suspect that perhaps the pattern may morph further along into something else that was, whatever. This hasn't happened, but this was actually further backed up by the weekly key reversal down we've had 2 weeks ago, which seemingly had been roundly rejected by these recent moves higher. So we still have now a break higher out of this falling wedge pattern, and that now leads to two possible targets: a primary target in the 702 3/4 area and a secondary harder to reach target X1 in the 757 area. The primary target is marked X. Let's see how these two pan out. Winnipeg canola. Whilst the September 2021 low at 839.20 and the August 21 low at 817 even both acted to halt the declines back in late June and early July, it was originally the 50% Fibonacci line, the October 20 to April 22 move at 863.80 that triggered the retro reverse engines to pull up as the market moved on the way down, and then again as recently as late August, capping the rise. The market over July formed a double bottom but failed to exploit that, and for that reason I decided to not place any primary or secondary targets on the upside. However, what has become evident since the start of the sideways to slightly lower movement seen since June is that there is a bear channel, currently 779.80 to 886.70 in operation, and it is this that is driving the current market. I say that because 7 weeks ago we had a dead cross, a lagging indicator of the medium moving average, currently at 907 even, moving down through the long moving average, currently 987.20. Additionally, until this week we have seen the short medium moving average, currently 833.80, acting as a bearish pressure on the market. Indeed, it is, I suspect, only because the short medium moving average has started to flatline and go sideways that we saw any aggressive moves higher. Thus we can read into the lack of significant action over the dead cross and the flatlining short medium moving average that the currently slightly bearish channel is the main driver lower of this market. Now, until that channel breaks or morphs into another pattern, then it will continue to show the slightly bearish angle of attack. This week we have seen an attempt to break that, with a move up over the short medium moving average, with a combined daily key reversal up and bullish evening engulfing pattern yesterday, and today an attempt at the 50% Fibonacci line at 863.80. A close eye needs to be kept now on whether this 50% Fibonacci line is to be breached, as then the upper bear channel line will become in the frame. However, I would be cautious about the seeming lack of integrity of this upper bear channel line just yet, as dropping rapidly into the frame of the market is the medium moving average, currently 907 even, and it may be a race as to see which gets there first to the upper bear channel line. One final, though currently distant, thing to bear in mind: the June 2020 to date uptrend, currently at 772.80, is now impinging upon the market from below. The week after next, it will cross over into the bear channel. Just something to bear in the back of your mind. Bursa Malaysia crude palm oil. Please take special note of the bearish halfway hesitation back in late June. The leg down that ran into July was likely triggered by the first dead cross we'd seen here for quite a while. It was of the short medium moving average, currently 38.80, down through the medium moving average, currently 46.91. The move down was halted. I have to assume it was halted, as there was nothing else nearby. It was halted by the extension of the neckline, currently 38.33, of the September 2015 to November 2017 head and shoulders pattern. After that, prices started a small bull channel higher, verging on being an ascending expanding wedge pattern that was broken on the downside at the turn of August into September. Now, three things to remember here. Firstly, that dead cross I mentioned earlier. Well, 6 weeks ago we had another dead cross as well, one I would regard as more significant. It was of the declining declining medium moving average, currently 46.91, down through the declining long moving average, currently 53.30. You may ask now, did that dead cross provoke a similar bearish action? Well, not at the time, but we have seen 2 weeks after that the break lower out of the bull channel. Interestingly, at the time, the short moving average, at the time of the break lower, the moving average, currently at 36.12, provided a sort of dynamic uptrend support that turned bearish 4 weeks ago. At the same time as the break lower out of the bull channel. Now, secondly, the short medium moving average, currently 38.80, was and is thundering lower. It's a pervasive bearish influence, as was seen as early as late August when it capped the market and acted as a proxy for a significant downtrend. And it's still influencing prices today, just a little above the market. That's where it is. This leads to my final point. Should we regard this broken bull channel as part of another, larger pattern? Is it part of a larger May to date bearish halfway hesitation, which was my original idea, or do we regard the action since July to date as part of a possible double bottom pattern? Last week the jury was still out on these two ideas, though I have to say, given the idea of a bearish halfway hesitation did look less trustworthy, given mid-September's action. However, this has reasserted itself as an idea this week, so it's becoming more trustworthy, I suppose, if you think about it. Especially after the price is pushed down through the July low at 34.49. I still can't figure out entirely why the market stopped there. Anyway, the gapping lower move, change or not, has allowed the construction of two small bearish Andrews and Schiff pitchforks. These are so small that I will not label them. You can see how small they are on the daily chart. They nevertheless give the opportunity for a further attempt lower. What is holding them up is the June 21 low at 33.26 and the January 2021 low at 32.50. These two need to be overcome. Of the idea of a bearish halfway hesitation is to thrive at all. Otherwise, the move back upwards could strengthen the idea of a lopsided double bottom. The action in this coming week will therefore be very, very interesting. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Tofpik and ADM Investor Service International Limited. And here comes the final bit.